Some people think the main laws giving the government the right to confiscate gold were removed. I'm going to let you look at the laws and form your own conclusion. Of course, others say, well, if they do confiscate gold, I simply won't turn it in. But then where are you going to use it if it becomes illegal to use like it was for over 40 years? So I'm not saying that there won't be a black market, but you're not likely to get the full value or be able to take advantage of the opportunities that present during resets. Today, I'll not only show you the possibility of gold confiscation, I'm going to start to explain the certain types of gold which were exceptions to the law before. And we know history has a tendency to repeat. Next week, I'm going to go much more deeply into that. But I know what I do personally, and I know why. And I'm going to share that with you today. So you can look at the facts and decide for yourself coming up. Will confiscation happen here again? Well, frankly, that's a matter of opinion that have both people weighing in, or all people weighing in from both sides of the aisle. But for me, as data gal, I prefer educated opinions, mine and yours, which is why we need to look at the laws that were then and are in place right now. Because the last time the gold was confiscated, there were certain types of gold that were exempt, collectible coins. And while that does not guarantee that they would be exempt in the future, again, history does have a tendency to repeat itself. Now, here at ITM Trading, we're all about those custom strategies. So we have nothing against bullion, we sell it. But everything has a place in your strategy, and that's based upon what you are trying to accomplish. Because we are frankly here to support your goals and objectives as well as educate you, which is what this YouTube channel is all about. Today, I'm going to show you that the laws are in place to allow it to happen. And I definitely feel like that is a probability, especially if the IMF gets to execute and takes a cashless and then deeply negative. Where are you going to go? So let's take a look at those gold laws. I'm going to reveal them to you. Because of course, Alan Greenspan, before he was the chair of the Federal Reserve, well, he wrote quite a lot about gold and how there is an almost hysterical antagonism toward the gold standard is one issue which unites status of all persuasion. They seem to sense that gold and economic freedom are inseparable, and I agree with that 100%. So we're going to start at the beginning with the Trading with the Enemy Act of 1917, because that's really the foundation of it, and it is still good law today. And it gave the president the power to oversee, restrict any and all trade with its enemies in times of war, including transactions on gold and silver. Of course, over time, those powers were expanded. So in an early Bank for International Settlements report, so that's the BIZ, that we still pull the reports today, keep in mind that is the central banker's central bank. Before the gold confiscation happened in 33, well, what was going on in the global banking sector? First of all, the gold to fiat money peg was breaking down. So there were a lot of countries that put in restrictions on the move in currency and then ultimately suspended the gold standard. This was in 31, so Great Britain, Norway, Sweden, Denmark, Finland, and Japan. That all happened before we did, because at that point, global central bankers quickly converted their foreign exchange holdings, their fiat money, into gold because of currency devaluations. Haven't we been talking about currency wars and currency devaluations and central bankers today buying gold at the highest level since they started keeping these records? Right? That was the beginning. This is the end, but you're going to see some similarities all the way through it. Because during the same period, and I'm going to show you this in the next slide, substantial quantities of gold, mostly of American origin, were also held outside of the central banks, showing a growing distrust of paper currencies. Well, outside of the system so that they could protect themselves. Well, fortunately, desperate governments do desperate things. So in this country, that didn't really last long. And in 1933, the government confiscated gold again. Now, William Woodin was the Treasury Secretary, but before he was that, he was head of the New York Federal Reserve. So is it possible that he understood that the global monetary system was breaking down? And then, of course, he became the Treasury Secretary here. So the exceptions for individuals, and it's really a key that you understand, not only did the collectible coins not have to be turned in, but importantly, they did not have to be monitored. And we could thank William Woodin for that insert into the confiscation. So if you held collectible coins, they may be acquired, held, and transported within the United States without the necessity of holding a license, therefore. That's how we know they were not monitored. Everything else was. In this 1934 BIZ annual report, they say that there was a record year in gold production. So this would have been looking at 33. Gold production, gold movements, and gold hoarding. Find this really interesting. Here is a table from that year. And look at, this is the U.S. Oops, I forgot to grab my little laser pointer. Okay, this is the U.S. Look at what happened in February. Confiscation happened in May. But in February, there was a massive amount of gold that left the system, right? Because it's private and invisible. Now, over in this column, what I'm trying to show you is if you have a plus, that means that you are putting gold into the system. If it's a minus, that means that you are taking it out. Look at all these minuses globally. So, I love this one. As part of this bid report, this figure would have been larger except for the energetic campaign in the United States to force hoarders to restore gold to the reserve banks. What do you mean restore gold? It was the public's gold to begin with, but what they mean is putting it into the system. And actually they estimated that out of all of that gold that left the system in February, 50% of that gold in private citizens' hands was collected. So where'd the rest go? Well, overseas, buried in the backyard, wherever. But it was not turned in, which is really interesting. But the best part of this report is really this little piece here where, and I'm sorry, I'm going to read it to you. And I know this is a lot of letters and words because we're looking at the laws and it's pretty cut and dry, but it is an instructive lesson in public psychology to analyze this chronological table against the background of simultaneous political and financial events to which gold movements are highly and almost immediately sensitive, especially when these events are alarming in character. Aren't we having a lot of alarming events happening right now? But, of course, they don't have the physical gold. They have the derivative gold. We'll come to that. Thus, the spectacular monetary gold loss in the United States in February 33 followed directly upon the outbreak of the banking crisis that month. Shocker. So they saw the public saw the financial system breaking down. And what did they do? They flew to the real safety of physical gold. Interesting. Now, I want you to also understand that all of this is set up in a chronological flow timeline. So, and you've got the link that will take you to all of these laws and rules and regulations and executive orders below. But I wanted to show you through Henry Mark Holzer, which is actually a professor of law focusing on constitutional law and other courses, but he really limits his practice to appeals and constitutional litigation. So he's definitely an expert on this topic. And this piece that was written in the 60s, How Americans Lost Their Right to Own Gold and Became Criminals in the Process, was really through the 1934 Emergency Banking Act, because what they did was they amended the Trading with the Enemy Act. They didn't revoke it, they merely amended it, and they expanded the president's powers. So now, instead of just having it during wartime, it is during wartime or any other period of national emergency declared by the president. Again, I want you to keep this in mind, because this is not just a solitary event. It is a long string of events. And so even though that law was amended, the president retained the right to investigate, regulate, or prohibit the hoarding, melting, exporting, or earmarking of gold or silver coin and bullion. So even though they changed the laws, well, it was then the public, if they wanted to hold on to their gold, that became criminals. Now, I'm diverting, but I'm not really, because a lot of people have asked about the gold clause. That is part of the strategy that we utilize here at ITM. And so I wanted to make sure that that was covered, because in 1933, those gold clauses inside of contracts were deemed null and void. Okay, so they confiscated those at the same time. Now, a gold clause is a provision in a contract that gives the holder of that contract, so let's say the landlord, the owner of that building, the right to require payment in gold. They can require payment in dollars, but the whole point of that was to protect the property owner from inflation and always be able to maintain its value, its purchasing power value. So they had those options. Now, that was true up until 1977. So any gold clauses at that point between 33 and 77 were null and void. But in 2008, and then after that, they could do it again. So in 2008, that was actually tested in court. In 33, they declared the gold clauses to be against public policy, but they also amended it so that it shall not apply to obligations issued on or after October 28, 77. And in 1996, in the Economic Growth and Regulatory Act, it allowed property owners to even enforce pre-1977 gold clauses. So that's exactly what was tested in 2008, and the conclusion that the judge came up with was that they conclude that the clauses are in fact enforceable. See, still good law. Doesn't matter when it happened. If it's still on the books as good law, it's still good law. Then in 1962, with President Kennedy, he started to expand the definition of rare and unusual. But because so many of those gold coins that were taken out in February of 33, we think a lot of them went overseas, President Kennedy wanted to bring them home. And so he enacted that Executive Order 11037. And then in 1969, in the Federal Register, again, you've got the link below, They changed the definition and then expanded it to include gold coin made prior to 1934. So may be imported without the necessity of obtaining a license. Okay, they can bring it back from Europe and they're not going to get in trouble. But gold coin made after 1934 and before 1960 may be imported if they have been originally issued for circulation within the country of issue. And this opened it up again. You know, you'll want to talk to your strategy specialist if you're developing your strategy, because this too is part of the strategy. And remember, all of this has got to be based upon what you're trying to accomplish. Believe me, I've tried to hang a picture and use the back of my shoe, and it worked, but a hammer works better. Okay, so, excuse me for 1 sec. Rare and unusual was also tested in court. So this lovely man passed away. And when they opened up his safe deposit box, what did they find? But a whole bunch of gold and silver coins. Those coins were sent to a qualified appraiser. And what happened? As it turns out, the face value of what he held in his box was $172 and change. But it appraised out at $744. Now, the courts looked at the Gold Reserve Act, and they said it draws a very sharp line distinction between gold coins made prior to April 5th, 1933, and those made thereafter. Since all of the coins found in their box were prior to 1933, they were all appraised. So there's that premium, which we're going to talk about next week. They were all appraised for amount far in excess of their face value, and therefore they're regarded as rare coins. So they did not have to go through probate, and guess what? No exceptions were ever filed in this case. Okay, now you've got court cases that have supported this. Now, I know I'm throwing a lot out at you, but I also want you to see that there's a lot in here. And I'm pretty sure I didn't get every single law in the world because I tried to minimize this. But what we do know that the US dollar was the world reserve currency as of the 1940s. But because of overprinting to the amount of gold we held in deep storage in the Vietnam War, as you can see, there began a run on the dollar where foreign countries were sending in their dollars in exchange for gold at $35 an ounce. I want you to keep that in mind because there's something that I find so flippin' interesting that, you know, if you had known about it, if you were there then and you had known about it, you might have taken advantage of it. Because in April of 1964, right here, private citizens were allowed to hold and trade, by the way, gold certificates again. Now, they couldn't convert those certificates into the physical metal. But you have to ask yourself, who do you think actually knew about this new law? What I remember from that same period of time, 1964, was standing in the back bedroom of my uncle's house. My Uncle Al was a major antique dealer back east. And he said to my parents, if anything should happen to me, Aunt Bertie will be well taken care of because of what are in these two safes. And I turned around to look. Of course, I didn't really understand it a whole lot then. I was only 10. But knowing what I know now, there were probably at least 3 monster boxes in each safe. So in other words, about 3,000 ounces of gold. Guess what? He was holding those legally because they were all pre-33s. But what I love is in 1964, they could buy those gold certificates at what? $30 or $35 an ounce. They couldn't convert them then, but maybe they could in the future. Oops. Okay, moving right along, because they were very busy. In 1965, President Johnson took the silver out of our silver coins. But what is really telling, aside from that, is that he openly admitted that if you tried to hoard it, if you tried to accumulate the silver, then we're going to manipulate the prices. We're just going to sell a whole bunch of silver and you're not going to be able to do it. That's pretty amazing that they would openly admit to an overt manipulation. Moving right along, though, because that really set up what happened next in 1971 when Nixon took the gold completely out of the system by taking us off the gold standard. Now, he didn't want us to worry about that bugaboo devaluation. So if you buy American products that are made here with American dollars, you are not going to feel any inflation. All right, with hindsight, how do you think that worked out? Globalization and lots of inflation. You know, we've lost what? Over 96% of the purchasing power value of the original dollar. So moving forward even after that in 1974. Now this is the law that most people will look at to determine and say they cannot confiscate again. Well, I got to tell you, governments get to do anything that they want unless you have enough people that say no. Okay, so the executive order, in order to conclude that transition from a gold-backed system to a fiat-backed system, this is President Ford had to get rid of those laws on the books, and that's what Executive Order 11825 did. And it revoked a whole bunch of executive orders. Again, the link is below. You'll be able to go in to look at this. But essentially what that did was it cleared the way for the public to own gold again. And then in 1976, they actually got rid of previous emergencies. So people think that between those two laws, okay, they can't confiscate again. When in that same law in 76, the president is still authorized to declare such a national emergency. And you got to keep in mind that the Trading with the Enemy Act is still in force. It is still a good, even today, it is still a good law. And that gives the president the power to oversee or restrict any and all trade with its enemies in times of war, and as we saw, that was expanded in times of national emergencies, including transactions in gold and silver. We know what the government giveth, the government can taketh away. Let's face it. But fortunately, we had a champion. And by the way, I just recently did an interview with Dr. Ron Paul. If you haven't seen it yet, you want to make sure that you do. The link is below for that as well, because he started on an honest money fight. And he was part of the government, so in the belly of the beast is where he went. He was a congressman. And he was part of the Gold Commission that was formed to take a look and assess and make recommendations on gold in the monetary system. I sure wish they had taken his advice. I think we'd be really much better off now. But in his minority report on the case for gold, I found something extraordinarily interesting. I don't really know exactly what this answer is, but it's certainly a question that begs to be asked, is really who owns the gold? Because the Federal Reserve has gold certificates which are all valued at the official U.S. gold price of $42.22 per ounce, but they're also the liability of the Treasury, and they're issued to the Federal Reserve against the gold holdings. The certificates represent a Federal Reserve claim on the assets of the Treasury. And what I think really interesting is that all gold held by the Treasury has been monetized in this fashion. So I really couldn't find anything more in depth. So that question as to who really owns the gold is still in play, and I guess in the future we might get the answer to that. But I did think that was super interesting when I read that in the case for gold, because so much of what's happening is central bank perception management. I mean, we know a rising gold price is an indication of a failing currency. So they really have to create that, or they have to control it. In the early 80s, President Reagan formalized that perception management program along with Rupert Murdoch. But back in 1934, when they were creating all these new laws, they set up the Exchange Stabilization Fund, which primarily was supposed to support the dollar, because of course all of that was changing globally. But bring that forward to 95 at a FOMC, which is the Federal Open Market Committee. So this is the Federal Reserve meeting, and there you go. It's pretty clear that these ESF operations are authorized, and because this law is so broadly laid out, okay, the words like credit has things covered like gold swaps, which are gold derivatives. So basically what he's saying in here, this is my interpretation, maybe you interpret it different, but you can go and look at and read all of this, that basically they had permission, legal permission, to go ahead and use gold derivatives to control the price of gold. And then there's Sir Alan, who is so for a gold standard before he became the central bank chair. While he was there, well, if the gold price broke, the thermometer would just basically be a measuring tool. So they were talking, now, of course, all of this data we don't get until much later, but they were openly talking in Federal Reserve meeting minutes about different ways and why and how they could manipulate the price of gold. And to me, that's really telling. And that wasn't that long ago. You're looking at the 90s there. But let's come forward a little bit more to 2002. In the federal regulations, Part 406, seizure and forfeiture of gold for violations of Gold Reserve Act of 1934 and gold regulations. So that means it's very, very broad. But the piece about this that I find quite illuminating is that the Secret Service officers are now authorized to make seizures of gold. Think they'll use it? So almost invisibly and quite quietly, the powers to gold confiscation were expanded again. Now, if you are not aware of this group, you might want to be. This is GATA, Gold Antitrust Action Committee. And in 2005, Chris Powell wrote a letter to the Treasury Secretary, and he had 3 big questions, and I'm pretty sure you guys have these questions too. So he wanted to know, how does the Treasury Department construe that time of war? And how can gold and silver investors know when the powers described are in operation or likely to come into operation? Are formal declarations of war by Congress required here, or lesser declarations, or none at all, but rather declarations made only by the president? Great question. He also asked, how does the Treasury Department construe hoarding? Does it include the ordinary collection of gold and silver coins, numismatic or not, and bullion by U.S. citizens, businesses, and corporations, absent any collaboration with enemies of the United States? Great question too. And then finally, does the Treasury Department construe Section 95A to empower the president to interfere with the ownership of shares in gold and silver mining companies merely because shares of such companies also might be owned by foreign nationals or foreign governments at war with the United States or not? Under what circumstances would the president be so empowered? And remember, a lot of this is referring back to the Trading with the Enemy Act, which is still good law. So let's look at the Treasury responses. This came from the Chief Counsel, Foreign Assets Control, U.S. Department of the Treasury. And the Treasury responded. The phrase, during the time of war, would seem to cover the period between the beginning of the war and the end of the war. Now, I want you to keep that in mind because I'm about to show you how many wars we're in right now. But if during a time of war the president expressly chose to restrict the hoarding of gold or silver, he could do so. So the answer is yes. The president can declare a gold confiscation again, or silver, or frankly anything else. But the president may restrict shares in any company owned by foreign persons consistent with the purposes of any declared emergency. So again, the president can restrict those shares of gold and silver mining companies simply because a foreign country that we're at war with might own some of the shares. Yes, he retains all of those powers because Trading with the Enemy Act and a lot of other ones are still good law in place. But not to be outdone was the law that went, or the executive order, I should say, that went into effect in 2012, the National Defense Resource Preparedness. And that actually expanded and organized more specifically, you got the link, look at the law, the confiscation powers on everything. I mean, they could come to my house and say, we want your labor. Ooh, we want all of the food that you're growing. And we want your gold and your silver and your car and everything else. They have absolute total powers to expand their powers of confiscation. It's in the law. But what I also want to show you is how that law has recently been tested. Because in 2002, a 1933 $20 gold St. Gaudens went to auction. Now, this coin, you know, the gold was supposed to be turned in 33, and it wasn't. There was some that made it out of the mint, and this particular coin happened to land in the hands of King Farouk. I'm pretty sure King Farouk is a 1%er. At any rate, he negotiated with a coin dealer in England who negotiated with the government, and they came to terms. And those terms were that there would only be one 1933 $20 gold coin allowed to be classified. Number two, the proceeds of that auction were split with the government. So half of it was, I suppose, King Farouk's compensation. I'm sure he didn't get full half of it. But in 2003, the Langboard family discovered 10 1933 $20 gold St. Gaudens in, well, it was her father's Switz safe deposit box. Now, he was a jeweler in Philadelphia, so he had a lot of exchange. He was constantly going to the reserve there, dropping off scrap gold, buying coins, etc., etc. So nobody really knows how it made it into his safe deposit box because he was dead and nobody could ask him. But they sent it to the mint for authentication. The mint then confiscated it. They seized it. And in 2012, judge says, no, those gold coins belong to Uncle Sam. I don't think they were part of the 1%. But they made a deal with King Farouk. They're not going back on their deal. So now I thought this was interesting, which is why I put in there. Roy Langboard said his father, who died in 2006, strongly believed the government would do the right thing for its citizens. And what eventually transpired was outright zeal on the part of the government to win an all-out legal war at all costs. Now, there's a lot more information on this. You've got the link to that. Follow it. I thought it was really a fascinating read. So they took it, the Langboard family took them, and they appealed it, and they finally made it to the Supreme Court. And in 2017, oh, let's see, we're 2019. Okay, in 2017, even though they could not prove that those coins had left the mint illegally, and remember, there was a whole bunch of gold coins that left that mint in February prior to the confiscation, even though they couldn't, the appeal was lost. You can construe whatever you want from it. You can look at that case more closely. You can formulate your own opinion. But I agree with Ron Paul 100%. It is no coincidence that the century of total war coincided with a century of central banking. Not a big shocker. Look at all of those laws that give so much power when we are in a state of national emergency or a state of war. This is from March 20th of 2019. And in this, they're referring to the International Emergency Economic Powers Act, or the IEEPA. As of March 1st, presidents had declared 54 national emergencies invoking IEEPA. 29 of them are still ongoing. And in fact, one has now been ongoing for 50 years. We're in a perpetual state of war because there are benefits to that for the government. We know that. We've heard about the industrial complex and war and all of that, and how much of our tax dollars go in that direction. Plus, the scope of powers over individual targets is also extensive. Such powers allow the president to block all the assets of a U.S. citizen or permanent resident. I cannot tell you what you ultimately need to do because that has to come from you. This is where I have lived my life. I have been groomed for this moment in time. I do not trust that the government has I'm sorry, I wish I could say something different, but I don't think they have my best interest at heart. I am not too big to fail. And neither are you. So if I have the option of doing something where it doesn't matter whether I'm right or whether I'm wrong, then that is the option that I'm going to take. In addition, when I look at what the 1%ers are doing for themselves, what the central bankers are doing for themselves, if I have the ability to position into it, and it costs me a little extra, which are the premiums, we're going to talk about that next week, then I'm going to take advantage of that. You know, I don't look at what my house insurance every day to see what is that up or down or what have you. I have that in case something catastrophic happens, and I maintain that. Well, that's the way I look at the collectible coins. I personally do, and this has not always been true, but I personally do not buy gold bullion. Silver bullion I do, but I do not personally buy gold bullion because these laws are in place. Do you think this power could be abused? Yeah, of course. The answer for me is yes. You can follow these links. You can draw your own conclusion. One link will take you to everything. This is an important one. You need to be sharing this. You need to do your own due diligence on it. But this is really, frankly, the key reason why I personally only buy collectible coins. Next week, I'm going to show you why I buy them for growth.
All right. Hello, everyone. Welcome to our first ever after video panel discussion. Let me introduce our guest that we have today. I have with us Eric, who is one of our 14 years he's been with us. He's one of our senior analysts and precious metals consultants. We have Lynette Zhang, our chief market analyst. You know, I'm Eric Griffin, president of ITM Trading. And what we wanted to do today is, we did our first ever sort of video on confiscation, and Lynette wanted to really just lay it out for you law by law by law by law. And Eric's been a student of the confiscation piece for many years, and he does a really good job of kind of bringing it all together. So I wanted to just start off with this little panel discussion with Eric kind of giving a synopsis of all of it in a quick 3-minute to 5-minute little blurb so that you guys could kind of get a quick version of it. And then, excuse me, we also have a couple of topics that we're going to discuss. And then if you have any questions, you can shoot them to questions@itmtrading.com, and we can put those on some future Q&As that we'll do. Okay?
Yeah.
So,
and
go ahead.
by the way, we did not plan this coordinated ensemble. It just was a happy circumstance.
Okay. So Eric, you want to go ahead and give us your breakdown?
Yes. Brief overview. Everybody talks primarily about Executive Order 6102. And that is the most talked about, most commonly looked at or researched piece. Mm-hmm. And what I found is, in over all my years of doing this and in my background in studying things and being a perpetual student, is that there are actually 10 executive orders that were tied to confiscation or recall between 1933 and 1974 when it became legal to own it again. Now, these executive orders, out of those 10, I found 5 that are pertinent, and I'd like to go through those. We know 6102, what were the pertinent pieces on that, is that you had...
We're recording from there, Eric.
So I need to look forward.
Yeah, sorry.
Oh, yeah,
He's
sorry.
never been on camera before with us, so the camera's not actually there. It's up over here. We have 3 cameras in the studio, but we're using that one right
Okay.
now. All right.
Sorry about that.
It's okay.
But anyway, going back to that, 6102 was the first. And in 6102, everybody knew that you had basically less than a month after April 28, 1933 to turn in your gold. And or you faced up to 10 years in prison and or $10,000 fine, or both. The rule writers, however, they wrote an exception in because William H. Wooden, who was the Treasury Secretary at the time, previous Fed chairman, he was also a coin collector, an avid coin collector, and he wrote that exception in really for himself and for others within his same bracket, so to speak,
The
rule writers, the
1%ers.
1%ers, correct, Lynette, to basically give them the provision where they could transfer their wealth over an event and be able to reposition back into income-bearing assets on the other side of the event and do it legally and get the most out of it, obviously. So that was really for them, not for us. And that's what I've always told people on the phone that I'm talking to, is if you look at history, it's got the most impact in a possibility of repeating itself. And that's why I want to let you know that it's still relevant today.
And what was that provision?
That provision was Article 2, Section B. If you look at the last line of Section B, it says if these coins have a recognized special value to collectors, they would be considered rare and unusual, thus would be exempt from a confiscation, or from this confiscation. So that was the first order that happened, guys. And the next order, in the orders following it, were really to throw in addendums or amendments to the original order. And it was for several reasons. One, to completely define why these coins were exempt or what would be exempt and what the laws were. And the other was if they were currently working on trials where they were going to need it for a form of prosecution, to help that prosecution in that trial, or get the gold out of the people that were trying to avoid turning it in. And I won't go into that, but the next one was actually in, because this was April of 1933, the next one was in August of 1933, and that was Executive Order 6260. And what it basically stated was that the collector was the only one that was exempt. Not the gambler, not the speculator, not the average Joe, not the criminal. Only the collector would be exempt. And it had to meet those guidelines of being historic, scientific, or numismatic in nature. And it had to be of a recognized special value to collectors, being a rare and unusual coin. So that was 6260. That was the second piece that was written against, or written towards that. Then the next was in January of 1934, which is Executive Order 6556, which basically it stated 3 things. And this is very interesting. One is it reiterated that those coins had to be of historic, scientific, or numismatic nature, and this is a repeat, of course, of what we were talking about before, but this is pertinent. And they had to be rare and unusual, and had to have that recognized special value to collectors. But it also went on, and this is where it gets interesting. It also went on because holding quarter eagles, $2.50 liberties or Indians, were considered illegal at this time. But what they did, because the public, was not really happy with having to turn in their gold, is they wrote a provision in to appear less draconian in this effect, because these coins were given away in birthday parties, Christmas, bar mitzvahs, special events. They had a perceived sentimental value. So they didn't want to appear to be taking anything away from the public that had this perceived sentimental value. So what they did was they said if these coins could meet the same criteria as the original grouping of coins that was exempt on the prior executive orders, then you could hold up to 4 species of these 2.5 pieces, which basically means same type, same year, same mint mark, and you could do it legally. So they threw the public a bone in this, which I thought was interesting. And then the last provision in 6556 basically stated that if you were an artisan or using gold by trade, you could hold up to $100 worth of the gold legally. Okay? And this is where it gets interesting, but they said if you were going to do more than that, then you had to obtain special order and license from the U.S. Treasury in order to do so. So they were basically more or less cornering people. So now we fast forward. Let's go to the next executive order. This was Executive Order 11037, and 11037 was in 1962. It was under JFK's piece, and this was a twofold piece in my opinion. It basically stated that it was now illegal to own gold offshore as a U.S. citizen. So if we backtrack a minute to go forward, if we look back before the original executive order was passed, the rich knew that that was coming. Mm-hmm. So what did they do? They drew as many gold pieces out of the banks as they could, and they transferred them over to European banks to avoid having them confiscated. They got them out of the country. And I don't know whether they knew or not. Who knows? We don't know. It's only speculation that they knew that provision was going to be in there, where they didn't make it illegal yet. But that happened in 62. And that was a big piece. And the other part of that was not just that it was illegal to own gold offshore as a U.S. citizen, but they wanted to basically repatriate that gold and get it back inside the United States banks' coffers. And that's really the whole provision for that. So that was a very important executive order. And then the last one was on December 31st, 1974, when it became legal to own gold again under the revocation order. Now, remember, I'd mentioned in the beginning that there were 10 executive orders that were tied to this original recall or confiscation, and that included 6102. But what was interesting about the revocation order when Gerald Ford made it legal to own gold again is that when he was stating that, he left 6102 out. That's still open. Why is it still open? That's my question, because historically when they leave something open, they tend to reuse it again. That's my opinion, and that's basically where I'm staying at. But why is it relevant today? It's relevant today because why did they call in gold? Well, let me give you one piece of information that I always tell people on the phone, because everybody, usually says, well, I don't believe it'll happen again. Well, here's why I believe it will. Up until December 31st, 2009, the Bank of International Settlements, they published a report annually that showed how much paper or derivative gold had been sold against how much gold physically existed estimated above and below ground. Well, folks, this is going to be a big number for you, and it's probably going to be hard to digest, because after December 31st, 2009, the Bank of International Settlements decided to divide that report into much smaller reports, and then through an accounting process, they decided to compact those reports to make them look smaller than they really were. And I think a lot of the reason was it was still a growing position, and they didn't want it to appear so big that people would see it. It would be too, right in their face. So the reality is what happened is they'd estimated that, and I'll basically let you know this, it's 423 trillion ounces, this is trillion with a T, of paper gold had been sold, paper gold, issued to the public, against an estimated 6.8 billion ounces that exist physically above and below ground. Now this is interesting. That number is so large. That means it was 62,000 ounces of paper gold estimated to have been sold against every 1 ounce that physically exists. Well, I don't know about you folks, but if I own a car and I print up 62,000 titles to the car and I sell those titles, who owns a car? That's me, you know. So that's why I say I believe because of that large number and then having to make good on those contracts, there's two choices they have. In the event that they do a recall, why would they do the recall? To eliminate those paper contracts at a much cheaper price point. And why I'm saying this is because if you look at the numbers, they have two choices. If they default on those contracts, and you know how large the number is, and I believe it's larger today because they stopped reporting on it accurately back in 2009, I believe that number is going to be much greater today. So the reality is they have two choices. They go to the open market and buy to make those contracts whole. They roll them over, or they pay them out. So if they're going to the open market and buy, we know there's not enough gold to cover those contracts. So gold goes into backwardation. We've seen this happen before where it's been pushed out as much as 11 months when they have to settle contracts within 30 to 90 days, depending on the contract.
Eric, could you just define backwardation so that people understand that? Because that's could be very well a new term.
Well, backwardation basically means that, you know, they basically don't have enough product to fulfill what's coming relevant on those
Coming due.
So when they have that happen, they have to make them whole. So that's why I said when they go to the open market to buy, they need to fill enough gold up to fulfill those contracts. And if they don't, that's where backwardation comes in, where there's not enough product to fulfill the contract. So basically, that was the problem that they would be looking at. But here's where it gets sticky. And this is what we're talking about, because everybody talks about the 1.4 quadrillion derivative market, okay? Well, in my viewpoint is, in looking at this, if they default on those, they can't go to the open market and buy. They end up having to basically say, we don't have the gold. Now they have to fulfill those via what? Paying the public back on them. Okay, well, how do you pay the contract holders back? They do it by strike price. And I'm going to make this real simple. I'm going to do it in terms of dollars. But as we know, gold's at right around $1,400 now. Okay, well, a strike price, let's keep it simple. Let's say it's $1,000 strike price. Well, you've got that huge number.
Meaning, strike price.
Strike price meaning like the spot price or melt value, that would be the strike price. Okay. So, to clarify, sorry about that.
That's
I get
okay.
going and I tend to.
That's okay. You're doing a great job. No.
But basically, thank you. 423 trillion ounces. Well, at a strike price of $1,000, that's $423,000 trillion. Okay, I'm sorry, but that's bigger than 1.4 quadrillion dollars. So at the end of the day, where's that money coming from, folks? I don't think they got it. Even if they had to print it, guess what happens? Hyperinflation, because they print too much money. So, sorry if I went too deep into this, but it's hard for everybody to see the whole picture if you don't include a lot of these facts.
Right.
And at the end of the day, you know, and one thing I've realized in all my years of doing this is, and this is my opinion, is the reality is nothing is what it seems, folks. And what I found is the political parties exist to keep the public divided, because if the public were united, they'd never let a private central bank control this nation's currency or interest rates, meaning the Federal Reserve. This is all about the banks, folks. It's all about the numbers and what's going on with these markets and what they report, what they change the reports on. At the end of the day, it's up to you to decide what's relevant for you and what's your comfort level.
Thanks for that.
That was great.
Yeah, thanks for that synopsis. That was
See,
really perfect.
we have really smart people here, and we all work together. We are
Absolutely.
definitely a team. We are definitely a family.
I try to get more of them on camera. Thanks for coming on.
Oh, you're welcome. Thank you.
Yeah,
for
we
having
have to
me.
thank you
So
for that.
I've aggregated a couple of just points that people have come up with over the last, couple of weeks. I've seen it over the years, but I wanted to bring them up, and because I know we all have our own opinions, and I thought it'd be cool for us to have these conversations,
Sure.
and then our viewers could kind of get our own individual feedback on these particular points.
Right.
So
and keep in mind too that we always do the Q&As. So if anything comes up for you, just shoot a question to questions@itmtrading.com.
Okay, so the first one, when it comes to confiscation, the first one that I see a lot of is they'll never confiscate gold because less than 3% of the population owns it, right? So, Lynette, why don't you speak to that one yourself, and then I'll have Eric give his opinion on that.
Okay, because where is that most of that gold in the public's hands held? Inside of IRAs and retirement plans, so they're inside of a depository. Now, if the government says we're going to take it, I don't know any depository that would say, wait, we're not going to give it to you.
Mm-hmm.
So, frankly, it's pretty easy to. In addition to that, those that understand money own gold. It's pretty simple. So, and desperate governments do desperate things. So there are many reasons, and the laws are still all in place. But if they go to the cashless and they go to the negative rates, I mean, even cash can't protect your principal. It hasn't protected your purchasing power for sure, but you can't even protect your principal. Where's the real flight to safety going to be? Are they really going to want you or allow you to then go to safety?
Right, and I want to comment on that because that was one of the things that I was saying earlier. Because in my opinion, you know, if they do a confiscation, it might not even be because they need the gold per se, right? They might not
just
need
like they did
it.
the silver in the 60s. Right? They
Right.
didn't call it in, so they didn't need it.
Right. But if they want to block the flight to safety like you talked about, especially if the IMF plan goes into place, we go cashless, then they can go as deeply negative on interest rates as they want to force spending. Well, if they go deeply negative on interest rates and you've got $100,000 in the bank and it's losing 10% interest per annum, you're not going to keep it there. Well, if gold is going up during that same period of time, naturally it makes sense. I'm going to go into gold, right? So if they go that route, I personally think that they'll have to block that flight to safety,
Yep.
right? And so it won't necessarily be about, oh, we need to get everybody's gold in our hands. It'll be, we need to make it illegal to own. We got to stop the outflow so that people do what we want them to do, not what they want themselves to be able to do, right?
But just to keep this in mind as well, I agree with that 100%, is, what the different kinds of gold. So when you're talking about like monetary gold, the bullion gold that you can hold inside of an IRA, this is actually why, and I say this all the time, I only like to buy the kind of gold that you cannot hold inside of an IRA because the government classifies it as collectible. It still has that status.
Right.
You want to
You
say
want to say
something
anything?
on it?
You have any feedback on this particular topic?
Well, I'll go back to the paper contracts that I was talking about earlier. I believe that, in the end of the day, that will be the reason why they need to recall gold or confiscate it again. And,
You think rather than just default on it, or just pay out in kind in dollars?
Well, they have to be able to make an attempt to do it the proper way, in the way they've done it before, to eliminate those contracts, to make them whole somehow.
Because you think that if they don't do that, then it shows a breakdown of the system?
Yes.
Okay.
Absolutely.
Yes, and keep in mind that very interesting little thing that I found in Dr. Ron Paul's study, where actually the Federal Reserve, the private bank, holds title to all of the Treasury's gold.
Right.
I mean, I think that's really interesting. How is that going to play out at that 42.22? But still,
yeah.
Right? I mean, how
Yeah,
are they going to
yeah.
pay that out if all of our gold is accounted to and the Federal Reserve
But
actually holds title?
regardless, we know they're not going to be able to pay out on all the contracts.
Of
So
course
what?
not.
Do you think that ultimately they'll do it because there's a call on 10% or
Well,
of the contracts?
I didn't say that they would, be able to pay on all the contracts. I'd say that would be the reason too. And I believe the bullion, like we talked about earlier, would be the cherry on the top of the sundae. And the reason being is, people say, well, they can't call gold in again, okay, because last time we were on a gold standard. Well, that's true. And what really happened was, okay, let's go back in history. 1929, there was a run on the banks. People were lining up to get their money out of the banks. After 1933, there were lines again at the banks, but it was to turn in their gold for the money because cash was scarce and they needed the gold in their hoppers.
The banks did.
The banks
did.
Yeah. Right. So a lot of those
Right, because then
pictures-
that allowed them to print more money, right?
Right. And the same thing is relevant today. If you're going to launch a new currency or you're going to tie currencies in a basket against something, peg them to something even fracturally, because back then, you see, the Federal Reserve could only print as much money. It was up to 40% gold according to how much fiat money they could print. That allowed them to only print so much. The reason why they recall gold is because they needed to print more money.
Right.
That's the bottom line.
Exactly.
So that's why they needed the gold back from the public. This time it would be a similar situation because now they're going to need the gold in the hoppers to tie it to the new currency somehow. Even though it might not be exchangeable, it could be a fractal backing. Just like we've talked about with the special drawing
SDRs,
right.
Right.
Okay,
Exactly.
and the IMF,
Exactly.
and the fact that China is now in more control of that than they've ever been, and now they're in the top position.
So you're
in
saying
number
they
3
put a
position
gold
out of
weighting in the
five.
basket in order to instill
They're
confidence.
going to have to.
Yeah.
Even Rickards has talked about that.
Yeah.
Actually, the IMF has talked about
Of
that.
course,
Yeah.
they've got it in their
So-
documentation in their meeting notes.
Well,
and-
Exactly.
And that was one of the points another one of the points that I wanted to bring up, which is a lot of people will say, "Oh, well, they're not going to confiscate gold again because we'll have to go." Back then we were on a gold standard. Today we're not, so there's not going to be a need to.
Right.
But you're pointing to something else there, which is if we have to give confidence, and I know you talk about it a lot, and
All
we
the
talk
time.
about it in our Q&As a lot, which is putting a weighting into whatever the next currency is going to be, whether that's the SDR or not. Well, they'll need the gold in their coffers to do
It's
that.
part
To
of their
generate the
perception.
confidence.
That's their
Exactly.
perception management.
Exactly.
Okay, and that's how they reinstill confidence once this whole thing breaks down, in my opinion.
Okay.
Exactly. And not only that, but that opinion is supported by history. That they always end up going
Precisely.
back to
You're right on
gold,
that.
which is also why they're probably accumulating massive amounts of it.
That's why the central banks are.
Yeah.
So another point that I get is, well, if they do confiscate gold again, they're not going to go door to door, right? Another one
It's
is, well, I'm
improbable.
just not going
Right.
to give it. I'm not going to give it up. I'm just going to hide it, keep it, right? So what do you think about that? Like, I know that they didn't. In 1933, they didn't go door to door, right?
No.
They just made it illegal to own. They made
Yes.
it a stiff penalty, and
Right.
then you couldn't utilize it.
But they
Right.
did go to door in India in 2016.
Well, I don't know. I've had a couple of our Indian watchers say that they didn't experience it, but it doesn't mean that it couldn't, right?
Right, because that was according to
So
the Treasury
I just wanted
Department.
to give that as a point of clarification that we've
That's
had
okay.
people who have come back and said that didn't happen here. So I wanted to make
do,
sure.
Do they have the capabilities to go door to door?
Why would they bother? There's
okay,
not enough
okay, but
gold
here-
out
Right,
there.
you make it the patriotic thing
Right.
to do to turn in your
That
gold.
was the old
and
saying, yeah.
you
Pay 'em a premium.
I know you feel like, because we've talked about this before, that they'll give the statutory rate of 42.22 an
Yeah,
ounce.
which I don't think so.
But I
Personally.
think you go, if fundamental value is 10,000, right, and then they go,
Well, hold on a second, really quick. I don't
Yeah.
mean to interrupt you, but let's talk about that for a minute. When they called gold in last time in 1933, the market value and the statutory rate were very similar. They're $20.67 an ounce, and we were very close to everyone around the world in that. But when they called that in and the public turned it in, they had it in their coffers, and they decided, okay, let's revalue this up to $35. That, in its sense, was a reset or a revaluation.
Yes,
think?
100%.
100%.
Okay,
100%.
so let's chat about this for a minute. Let's chat, because I think this is important. What it states basically is they have a legal precedent of doing it at the legal statutory rate. There's no other legal precedent out there. This is what they've done historically,
Right,
correct?
right, yeah.
Okay, that's my argument that I've used when you and I have been chatting about it before. But the thing is, let's look at this. That was a 70% devaluation, everything you turn in. The public lost 70% of their money by turning that in. And then it was illegal to own
well, hold
gold
on, because
again.
the figure is 42%.
No,
Meaning from when they went from $20.67 to $35, it devalued the value of the dollar by 42%.
It was stated that it was a 70% loss.
It was a 42. I've done the math.
Well, okay.
So I just wanted to be clear.
Okay, that's fine. Even if it's a 42% loss, it's still a large loss. It's near, okay, even at 42, it's 50%, right? Almost. It's close. But the revaluation is, that's a huge hit on 100,000. That's $42,000. I don't know about you, but I don't want to lose $42,000 in that form. So, but the reality is it happened, and then it stayed fixed in rate until it was legal to own gold again in 1974, where then they raised it to the intraday rate of $42.22 an ounce. And to be exactly correct, and we can include this link, the U.S. Treasury has a ledger, gold ledger sheet on their website, and it shows the total amount of gold that they claim they hold, even though there hasn't been an official audit done on it since 1953, so we don't know if it's there or not. But let's say it is. It's around 263 million ounces and change at a valuation of about $11.4 billion at that rate, even though the spot gold or melt is at $1,500 right now, right? So at the bottom of the page, you go into the little notes at the bottom, and it says this is based on a valuation rate of 42.2222 cents an ounce. Well, if the government's valuing their gold in deep storage at that rate, okay, why are they still doing it at that rate when gold's at this level? Number one. Number two is, why would they want to pay you more than what they're valuing their gold at? They don't have to justify it.
Well, other than what Lynette and I...
And I'm not saying that's wrong.
And I'm not saying you're wrong either, right?
Because we don't know.
We don't know.
Exactly.
This is all
We have
opinion,
no idea.
but it's based on research.
And it's speculation on our part,
and connecting
right? So,
the dots, folks. This is what it's about.
We always talk about, they've probably heard it a billion times from us, we always talk about that, you know, it's easier to say, hey, it's illegal to own, so you're not really going to be able to use it anywhere. And we really need it because that's what's going to strengthen the currency and the economy and everything again.
Right.
So it's $1,500 an ounce. We're going to go ahead and give you $1,500 or $2,000 an ounce for it. So people go, oh, you know, heck, they're going to give me my money for it. It's illegal. I don't want to mess around. Or you know what? Let me make the $500, not realizing that that when they allow it to go to the fundamental value of 10,000 or whatever it is at that time, now the purchasing power just of their dollar just dropped 400%. Right. And because that's exactly what they did in 1933. They took it all in, gave people the price. Everyone's like, okay, here you go, and then boom.
Going back to that 1933
revalue
point, though. Going back to that 1933 point, when they told them they had to turn it in, they were willing to turn it in. Why? Because cash was scarce. And it made them they felt forced, or they felt obligated, or by necessity that they need to eat and provide for their family, that they had to turn in to get this cash. So there's legal precedent of them doing that. Mm-hmm. That's why I keep going back to the 4222 myself, but that's my opinion.
Yeah.
You know, the other thing that I kind of, when you were talking about what happened in 71, I think we will also need to really look at what happened before 71.
Right.
Because there were basically two gold markets. There was the fixed gold market, and then there was the real market based upon supply and demand. And what I found extremely interesting was the fact that they legalized individuals owning gold certificates again in 64. And what was that price based on? Probably, I don't know the answer to that. I gave you the link for that. Probably $35, exactly. Mm-hmm. Now, who would have even known about that? So part of what we're looking at is going back to that perception management piece and going back to that 1%er piece. You know, they're going to set it up however they set it up. The most likely outcome, in my opinion, is that they're going to set it up where you just have this small group that benefits from this and nobody else knows it. So I don't think they're going to want any pushback.
And that also tells me I'd rather follow what they do so I can have the options they have than follow what everyone else is doing and end up in a sinkhole. That's my own opinion, you know, because I want to get the most out of this too. I want my clients to get the most out of this, and that's why I educate them to this level and let them make the choice.
Mm-hmm. Right.
That's what's so critical. It's a choice,
right.
Folks.
It is a choice.
It's based on your comfort level and what you're trying to achieve.
Exactly.
That's the way we work it.
Right, and we sell all types of physical metal.
Sure we
do.
You
know, and a large portion of what we sell, a decent percentage of it is actually in physical gold and silver bullion. And so, you know, we like to be education first. We like to tell people, let them know what the deal is. That's the reason why Lynette doesn't own any bullion, right?
I don't either.
exactly. And so
Does anybody here actually own
I
gold
don't.
bullion?
I haven't. I see everyone's transactions
Right,
obviously because I
that's
run
why I'm asking
operations,
you.
and
If
I
there's
haven't
any,
seen
it's a
anybody.
small percentage. It's
Yeah.
a very small.
Yeah, I don't
It might
think
be in
any-
silver, you know,
Well, it's silver, yes.
but that's different.
But
you know.
yes, so we're talking about two
But-
different beasts.
Couple breakables.
Oh,
Mhm.
you have some breakables?
Breakables. Yeah, they might. Yeah, that's possible.
Right, just for the event if they need to do the
Possible
bartering or whatever,
interim
and
in
it's still
between a
allowed
reset
to be
and
there.
bartering and
Yeah.
reset, what have
So,
Right.
you know, we practice what we preach here, but we
Yeah,
want to
most
make sure
definitely.
that you guys are educated first and foremost, and that's always our goal. It's the whole point of this channel. And so, is there anything on that note that we want to say? We're at 31 minutes on this portion, and the video itself is 39, so we're already pretty far into this video. We can go, if there's a ton of demand for questions on this, we can always get our panel back live and
Yeah.
do one live.
Yeah, it's a broad topic, and it's one that
And it's an
deserves
important
it deserves
one,
the attention that we're trying to give it.
Right.
That I have been in this. I've been with ITM a long time. Eric said
Yep.
14 years, but to give you a little bit of an idea on my background, I started very early because I inherited my grandfather's collection upon his passing, which was like a sock full of coins that they'd thrown up before the Great Depression. And he died in 1977. My grandmother gave me that in 1978. And I rolled that out on the bed and thought it was the coolest thing since sliced bread, but I didn't know anything about it because I was really young, folks. And I looked at that and I said, I had one question for her. I said, Grandma, why is there no gold in here? And she goes, Son, they took it from us. And
I got goosebumps.
I was blown
with that.
away when she said that, but you know what? It was the coolest thing. I started reading it. I started looking for information on it. They bought me a red book back then because that was the thing to get, you know, Whitman red book. And I was looking at this, and I was looking at all these different things, and then I started going into coin dealers in Albany, Oregon. And that was really an interesting experience because if they wanted something, they knew how to get it, you know. And
Yeah.
I didn't know entirely how to do trades at that time, but I learned quickly, and I learned how to catalog the collection and move forward. And you know what was funny is, and I'll tell this real quick because this is so important, is there was a penny they were looking for in there. It was one of the San Francisco mint pennies right around the time of the earthquake, so it was pretty rare. And they said, if you can find this, I'll give you $13 for it. And I'm like, $13 for a penny? You know, and I said, that's cool, because that's enough I can buy a digital watch. You know? And that was so big in 78, and I said, man, this is way cool. So I found it, and I saw
Digital
they got
watch
my
today is
digital watch.
400.
Yeah, right.
Well, that's
it's like
because-
the iWatch, you know, it's the same thing, but back then it was
Thank
a big,
you,
big
inflation.
cutting edge
Right.
thing.
Well, but thank you, inflation,
Exactly,
too.
exactly.
Because,
But
yeah.
what it led me to was it got me so enthrived in this that I started getting into other collectibles back then. And I started attending shows, and I went to coin shows, and I later became a dealer at shows. And then later, by the late 80s, a promoter of regional and national shows. But in the early 80s, 82 to 80, I think it was 86, I had a store. It was called Behind the Plate, but I had sports cards and I had coins. And back then, I was doing shows, and I got a write-up in the Baseball Card Hobby News as being one of the youngest dealers in the nation with my staff of Behind the Plate. And that was so cool, but it got me into understanding the retail side of this because then I had a second store in the early 90s, retail storefront, and then that made me want to come here to be a broker.
I'm glad you did.
So it just, that's the way I played into it. So I've been around it for 42 years. So this is not my first rodeo in this.
Well, that's why we wanted to bring you on, because you're a
Exactly.
student of the game, and I super appreciate you coming on and doing this with us.
Why, thank you.
It's our first time, and I think it went really well, and I appreciate it. So,
Yeah,
My
me
pleasure.
too.
I'm
This
happy.
was fun.
questions
I
at
was excited.
ITMtrading.com. Until we see you next time.
Please be safe out there, and remember that financial shields are made of physical gold and silver.
Yes.
So be careful out there. Bye-bye.
Bye.